cost accounting. Right, so cost accounting. Before we start anything, let's talk about what is cost accounting. And it's simply a system of accounting that tracks the company's entire cost or production for a given period. So we're essentially talking about businesses that are creating products. You know, in the previous businesses that we've been using since grade 10, we've only dealt with businesses that sell products after it's already been complete. But in this case, we're dealing with businesses that are creating products from scratch. Now, this is a paper 2 topic. You're not going to find this topic in paper 1 because it's managerial accounting. Right. Why is cost accounting important? So firstly, we need to have accurate pricings because it's in the word cost, right? So we want to ensure that the pricings that the selling price that we are creating for our product is in line with the cost so that we can make a profit. It is for improved cost management to make sure that we're not overspending on certain items or even underspending on others, to make better financial decisions, obviously, to be compliant with regulations, because remember, we're dealing with a factory or manufacturing concern, and there's certain compliances and regulations that go with it, and to enhance budgeting and forecasting. So that is one of the reasons why we have cost accounting. Right, so let's talk about the various types of costs. And the very first type of cost is direct material cost, or DMC. And it's directly linked with the word raw materials issued. Now, how do we calculate raw materials issued? Which is, by the way, the materials used in order to manufacture the item we are producing. Right, so we're going to say opening stock, which is OS, and we're specifically talking about opening stock of raw materials, purchases of raw materials, plus carriage on purchases of raw materials. It will include import duties, it will include custom duties, and then we will subtract the closing stock of raw materials. Right. The other type of cost is a direct labor cost. And what this means, it is essentially the labor costs of your factory workers. So the people that are hands-on with the production of your product. And what that will entail, it will entail your normal wage, which is your number of workers times the number of hours times rate. Rate makes reference to the amount of money spent per hour. And then we will add any overtime and any UIF contributions made by the employer or the business owner. Right, so those two costs, direct labor costs, are what we consider prime costs, which is the firm's expenses directly related to the materials and the labor's use. So that is prime costs, which is a variable cost, and it will come up later. Variable cost is essentially costs that will change according to the number of products you use. So if you make 5 products, your variable cost will be a certain amount. If you make 500 products, it will be a lot more than creating 5 products, right? So variable cost. Then the other main costs, which is your factory overhead. Right? Now, your factory overhead is essentially any other costs made within the factory and that is indirectly involved in the production of your items. So, what does it entail? It will entail your indirect material, and please take note, there is a calculation that will be expected of you. So there it's opening stock plus purchases minus closing stock. Then there's the indirect labor. So here we're talking about any cleaners. I mean, who wants to work in a dirty place? No one. Okay, there are some of you, but okay, we move. Right, so we want cleaners and securities and foremen all working within the factory environment. We are not talking about the cleaners working in the office. We're not talking about the security of the office, we're specifically talking about the indirect labor within or around the factory. Okay. And obviously, we're going to add the contributions, UIF and pension fund. The other indirect costs is depreciation of factory equipment and water and electricity of factory and all the other factory expenses. Okay, so your indirect material or your factory overheads, it's in the word factory. It's expenses found within the factory, and it's indirect expenses. Okay, important to have, but not something that will be directly that you can see within the product itself. And that is, these expenses are considered fixed costs. Now, what is fixed costs? It's costs that do not change. Look, you're still going to pay the rent of your factory, irrespective of whether you made one item or two or 500 or 5,000. The landlord wants their money, okay? So that is why it's considered fixed. It does not change according to the number of items that you produced. Very important, take note of that, right? It's going to come up when we have to do other calculations. And then there are other costs within this manufacturing environment. There's the distribution cost. Now, what does it entail? It entails storage costs, handling costs, direct selling expenses, freight costs, basically means transportation costs of the materials, managerial personnel costs. We're talking about the sales people. We're talking about commission income. We're talking about advertisements. So distribution costs is any costs pertaining to us selling our product, right? And we call it selling and distribution. That is a variable cost. It is based according to the number of items we sell. If we don't sell, there won't be cost to that. Okay? Now, we're speaking directly, we're generalizing completely over here. Obviously, in the real world, will change a little bit. But in our high school accounting, we call selling and distribution a variable cost, a cost that is linked to the number of items sold, right? So the more you sell, the more the cost. If you sell nothing, there will be no cost, okay? But only in high school accounting, but we know that it can change in real life accounting, eh? Right, so the next one is administrative costs or expenses. And this cost will primarily be for office expense, right? So what does it mean? IT services of the office. Salaries, wages of office workers, finance and insurance of office loans or office maintenance, building and rent of office. So when we speak of administrative costs, we specifically using the word office, okay? So there are three types of costs. Your factory costs, and we've gone through the different types of factory costs. Then you have your selling and distribution costs, anything pertaining to sales. That includes bad debts, because what happens before bad debts occurs? We have to sell something. And then we have our administration costs. And the key word over there is office. Anything office, anything admin will make reference to your admin costs. And those three main costs will be found in a manufacturing environment, right? So admin costs, as I mentioned, and this is considered a fixed cost because you need to pay your office workers, whether we make 500 items, 4 items, whatever, it must still be paid, right? Let's have a look at the next one, cost per unit. Now, we're going to go into calculations here. And when we speak about and speak of cost per unit, we're essentially talking about the cost price of the item we are selling, right? And it's simply total costs divided by the total number of units produced. And specifically, we are speaking of the factory cost. So we're talking about direct material, direct labor, and factory overheads together will be the total costs, right? Divided by the number of units produced. And that will give us our cost per unit or the cost price of the item we are selling. Right, so the other cost per unit you must know of, which is your fixed cost. And your fixed cost, as we mentioned prior, would be your factory overheads and your administrative costs, AC, FOHC is factory overheads cost, if you're wondering. And then we have variable costs we spoke of is your DMC, direct material, direct labor costs, and your selling and distribution, SDC. All of this you have in your notes. I'm just going through it with you. And how you calculate the cost per unit? If you want to calculate fixed cost per unit, you take your total fixed cost divided by the number of units produced. Or if you want to calculate your variable cost, you take your total variable cost divided by the number of units produced. Let's go to the next one. Very importantly, your production cost statement. And essentially what we are trying to figure out here is the total cost of the production of all the units produced. So what is familiar there? Direct material, direct labor is equal to your prime costs. Then we have factory overheads, which is all your indirect costs within your factory. That will give you a total cost of production for the year. However, we're going to add the work in process at the beginning of the year. So the work in process at the beginning of the year is the items that we did not complete at the end of last year. So that's essentially items that we can complete and then sell it for future. Right, so work in progress, if you don't complete anything or if you don't complete the items, we're not going to throw it away. What are we going to do? We're going to wait. We want to complete that item in order to sell. So we'll add our work in process at the beginning of the year and subtract any items we did not complete at the end of the year, which is your work in process. And there's some, there are some textbooks that will say progress, but in this case, we're using process. And take note that we are subtracting the work in process at the end of the year. And that will give you the total cost of all your items that you produce. Right, so then they can ask us for the statement of comprehensive income. And this is an abridged, meaning it's a shortened version of what it could look like, right? So it will be sales minus cost of sales, which is equal to gross profit. You add your other costs, which is your selling and distribution cost and your admin costs, and that will be equal to your net profit for the year. But before we move on to the next slide, I would like to just hover around cost of sales. You'll see, in order to calculate cost of sales, you need to look at your finished goods because it's your finished goods that you're going to sell. So in order to calculate your cost of sales, you're going to say opening stock plus the finished goods produced for the year minus the closing stock of your finished goods. So it's the opening stock of your finished goods plus all the finished goods you produced for the year minus the closing stock, right? So please take note of that. That cost of sales is linked to finished goods, right? So what does the calculations mean? What does it mean? So you would do the calculations and you will look at the costs that are either higher or lower than budgeted costs. Doesn't it remind you of budgeting, right? And then you will also look at those items that are exceptionally high, okay, and that need to be controlled. And we're specifically talking about expenses here, okay, and how the costs will compare to previous years. That is what the calculations will reveal. There are more calculations, and the very, very, very important calculation that you must know is your BEP. Now, BEP stands for break-even point. And what does it mean? It means how many items must the business produce in order to ensure that no profit or loss has been made, okay? We just want to make sure that we cover our costs. That's it. So how many items must we produce in order to cover our costs, in order to pay our workers, in order to pay water and electricity, in order to pay rental, etc., etc. We want to know how many items we need to produce, right? So it's that balance, How much profit did we make, or how much must we sell in order to cover our expenses, right? So this is your break-even formula. You should know this. They will say fixed cost, and please take note, it's your total fixed cost, and then divided by the selling price per unit minus variable price per unit. So please take note, your variable cost per unit will be your direct materials plus your selling and distribution cost per unit. Sometimes the selling price per unit and variable cost per unit, they call it contribution cost. So where you see contribution cost on your formula sheet, they're essentially saying what is your selling price per unit and what is your, selling price per unit minus variable cost per unit is in fact your contribution cost. Okay, so we want to know, we want to know how much items we can, how many items we need to make in order to ensure that we cover all our fixed costs. Right, so now let's get into an activity. I love this part, guys. Right, so you should have the following activity in front of you, which is activity 4.1. And the following information relates the financial year ended the 28th of February 2023, and the business manufactures one type of product. So we know that everything that you see is going to be related to one product. What are we required to do? We are required to do the following. We need to prepare a factory overhead note. So we are talking about all our indirect costs. And what is nice is that they listed the factory overhead costs. They were very nice to actually put CA and B and CC and CC and CC. In the exams, it's not going to be that easy, eh? This is only to guide. So yes, we're having the session, but it's not the be-all and end-all. You need to go through past papers, okay? You need to know how the examiners are going to ask you. But these are sort of the basic things that the examiners can ask you, right? And then we're obviously going to complete a production cost statement. We have the information over there, okay? We're going to make a reference to the information in a moment. And then what else do we have? There's some additional information that you have. And let us get into the questions. Oopsie. Right, let's get into the questions. So the very first question they asked us is to calculate the consumable stores used in the factory. So we're talking about the consumable stores that was actually used. What are we going to do and how are we going to do that calculation? You're going to take your opening stock plus your purchases minus your closing stock. Right. So now they're making reference to consumable stores. Now we're going to look for information relating to consumable stores. Right, and as they were very kind, they told us we needed to look at information A, and we see that information A, what does it say over there? Consumable stores. So we know we have to use that information. They also show that it's on the 28th of February 2022 and the 28th of February 2023. That is essentially the beginning of your financial period and the end of your financial period. So basically it's the end of the previous years, but we can see it as the beginning, okay? 2022 and 2023 will then be the end of the current financial period we're looking at. Then there's more. They also give us information where they say consumable stores purchased. So what do we have? We have beginning, we have end, and we have purchased. Let's put that in a calculation. And we're going to say your opening stock, as we mentioned, it's going to be 2,500 plus what you purchased, it's 29,800, and minus what we had at the end of the financial period. So this is basically the stock we did not use. So we did not use this consumable stores. We place it in our financial statements for us to know that there were leftover consumable stores. We're not going to be, oh, we bought this amount of consumable stores, we didn't use it this year, let's throw it away. We're not going to throw it away. It's not going to be wise to do that. So what do? We take our consumable stores and we put it as consumable stores on hand in our financial statements, right? So we're going to minus that 3,900 and you will type it into your calculator and you should get 28,400. That's the end. Right, let's move on to the next one, factory rent. Now in the factory rent we see that our information B, they give us the factory rent for office section only. So that is only for the office. So now remember, there are 3 costs in the manufacturing concern. It's the factory cost, it is the office cost, and it is the selling and distribution. So they're only giving us one section, right? So we need to look at more information. So let's find more information at C. So it does say here, second bullet point, rent is shared between the factory, sales, and admin in the ratio of 6, 3, and 2. So it means that the factory is 6 out of, is the ratio 6. Your sales is 3, your selling and distribution, and your administrative is 2. Now, I'm sure your teacher said this. It's what you want over what you have. So we want the ratio 6. We have 2. So if we were to do the calculation in our books, this is what we would do. We would say, right, our rent expense was 12,200, divide that by 2, times it by 6, or if you like it neater, I normally go 12,200 times what I want over what I have. It will give you the same answer of 36,600. Right. Let's go to the water and electricity. Now, in the water and electricity, they give us some information in information C. We see that the February 2023 water and electricity account of 5,600 must still be paid. Now, we know when it comes to adjustments and something must be paid, what must we do? We need to add it. So it's like the normal accrued expense, right? So let's get into it. Now, what is the balance for water and electricity? So according to our information, it is 54,400. Now take note, 54,400 is for the entire sector, for the entire manufacturing concern. So it includes not only the factory, but it includes the office, and it includes anything regarding to selling and distribution. So the first thing we're going to do over here is figure out what the total water and electricity is. Right. So water and electricity, 54,400, and we're going to add. What must we add? We must add that 5,600, right? So we're going to add that 5,600 plus 5,600 together. That will give us our total water and electricity. Then they tell us, remember, they told us, note that 75% of our water and electricity relates to the factory. And remember, we are trying to figure out what the factory overhead cost is. Factory. Right, so what are we going to do? We're first going to figure out what our total water and electricity is, and then we're going to say times 75%. And what you should get, grade 12s, is 45,000 Rand. And that will be water and electricity only for the factory. Right, let's move on to the next one, factory insurance. So we're going to look for the information regarding factory insurance. We're going to start with information C. I like looking at the additional information. Right, so information C is as follows. It says, insurance includes additional premium of 5,600 paid for the period 1st of January and 30th of June 2023. Now we can clearly see that some of that period falls with outside of our financial period. So it's like a prepaid expense. And what do we do with prepaid expense? We subtract, isn't it? And then they say this expense is allocated between the factory and the sales. So meaning that is 4 and that is 1. Factory and the sales. So the insurance amount that we see in our list of balances, that will be for the entire manufacturing concern. Okay, so that 33,500 will be for the entire. So what must we do? Let us figure out how much or how many months must not be included in our calculation first. Okay, so how many months must not be included in our calculation? So we know that our financial year ends on the 28th of February. So it means March, April, May, and June must not be included, and that is 4 months. So of the amount of that 5,600, if I'm not mistaken, 5,000, let me just get to that information quickly. It's 5,700, my apologies. 5,700 of that, only 4 months must be subtracted. So we're going to figure out of this total of 6 months, the 4 months, and then subtract it. Right, so what are we going to do? We're going to say 5,700 times what we want over what we have. We want the 4 months out of the 6 months that were paid. And if we say 5,700, that will give us 3,800. So it means that 3,800 must be subtracted from our total insurance amount. And what was our total insurance amount? Our total insurance amount was 33,500. So we're going to say 33,500 minus 3,800. And what are we going to do? What we want over what we have. So we want 4 parts of the total 5 parts there are. Right? Because four parts belong to the factory and 1 part belong to the sales and distribution, and together it makes 5 parts. So what you want over what you have, and once you have that, your total amount should be 23,760. 23,760. Great stuff, everyone. We are now going to move to the second part of our question, and that is your factory overhead and doing your production cost statement. Now, what is nice is that we've already done lots of calculations regarding factory overheads, so it's just a matter of transferring information from our calculations to our factory overhead notes. So let's do that quickly. Let's do that. Right. So here we have our factory overhead notes. And what is found in it? It's our factory salary of 102,400 and our sundry expenses of 47,040 rand. So that's already been entered for us. What we need to do is enter the rest of our factory expenses. Okay? That's what we're going to do. So I'm going to add consumable stores, because I know it's an indirect cost, and therefore it goes into factory overheads. Please take notes. I'm only writing down the consumable stores that I used for the year. Now, in the exams, they might not have this section, right? However, you need to show these calculations next to the wording. Okay. Then we have factory rent. So we've identified it belongs to the factory and it's an indirect cost. And our factory rent is 36,600. Then we have the water and electricity. You don't have to write factory water and electricity, but if you wish to do so, then please, by all means, do it. I don't even have to write factory rent there. Right, so water and electricity, what does that amount to? 45,000. I write 45,000. Right, what's next? Then we have our factory insurance. Factory insurance. Right, there we go. We've already calculated it. But if we did not calculate it, if they didn't ask us to do that, what must we do? We need to show the calculation on the face of our factory overhead note. So what was our factory insurance? Our factory insurance, as calculated, 23,760. 23,760. And you might now panic and say, oh my gosh, ma'am, there's an extra line. It just so happens to be an extra line, guys. I'm not going to lie. I don't know why, but it is what it is. It is an extra line. Don't stress about it. Right. So you would take your calculator and you will add up everything, and it will add up to 283,200. Right. So 283,200, and it's this information that will go into your production cost statement as factory overheads. Right. So now let's go into our production cost statement. Cool. So we have our production cost statement over there. There's some missing amounts. Now, please, grade 12, go study your formats. I'm telling you now, it's a lifesaver. You will have less stress. So study it, man. Do yourself a favor. Go and study your production cost statement. Study any formats, whether it be income statement, balance sheet, cash flow. Go and study your formats. Right. So we have our formats over here, or rather, we have an empty, and let's fill in our information. So we know that our production cost statement will start with direct material, because you need material to start. You need material to start your production of products. What's the point of having workers and no material? I mean, then you're not going to produce anything. So very importantly, start with direct material. Then we're going to have direct labor. We need to figure out what direct labor is. Then prime cost, and they were very nice. They filled in prime cost for us. And then there's a missing amount here. It is going to be our factory overheads. Factory overhead. Heads. Factory overheads. Yeah, let's go with factory overheads. And what was the amount? We just did it, so let's fill it in. Our factory overhead amount was 283,200. 283,200. Grade 12s, I want you to know nothing's going to go in brackets here, okay? Because remember, we're figuring out the cost statement. So everything we see over here are expenses. So we're essentially trying to figure out what are the expenses in order for us to produce our item. And that's why we're not going to do the whole bracket and da-da-da-da-da, because everything is an expense, okay? So we're trying to figure out what is our cost in order to produce our item. Okay, cool. So there we have factory overheads. Total manufacturing costs, that is going to be our prime costs plus our factory overhead, and we see that the total manufacturing cost amounts to 1,663,200. So it's these two amounts together plus added that will give us our total manufacturing costs. So how much money did we use in order to produce for the year? Then we have work in progress at the beginning. We add that one because those were the items we did not complete. However, it could still be completed in order to produce a finished good. And that's why we're adding that amount of 35,100. So essentially, we spent 35,100 last year in order to produce items halfway. All right, so we're going to add that to our cost. Okay? We're going to add these two amounts over here, the 1,663,200, let's just say it like that, plus 35,100, and together it will give us a total cost of 1,698,300. 1,698,300. Okay, so now what are we going to do? We are going to look for any balances that will assist us, and especially for work in progress. So if you look at our list of our balances, we see information A, there's work in progress 35,100, which was placed in the format for us, and then there's 145,800. Right, that is your end of year work in progress. So we're going to say 145,800. Great stuff. So that we're going to subtract, okay, because we did not complete it, and therefore we are going to subtract it. Right, there's no other information given to us regarding anything. However, they do tell us, if you look at information E, it says the business produced 2,500 bags at the cost of 621 each. So that is going to be the total cost of production of finished goods. Total cost of production of finished goods. So we're going to add it now. Total cost of production. Right, and how are we going to calculate it? We're going to say 2,500 times 621, and that amounts to, I just want to give you a couple of seconds to calculate it, 1,552,500, or 1,552,500. Okay. So, if you look at your direct labor, it's very easy to figure it out without looking at additional information, by just looking at your format and what you filled in. You can simply say the 138,000 minus 792,740, and that amounts to 587,260. Because if you add these two amounts, it will give us that 1,380,000, which they told us is what our prime costs amount to. Okay, but now you might be asking, but ma'am, or maybe not, you're not asking, but ma'am, why are they giving us additional information regarding direct labor, right? Now, I'm going to go through it to show you that it actually amounts to 587,260. I'm going to show you that it actually amounts to 587,260. Right. So if you were not given that prime cost, you would obviously need to calculate labor costs. So let me go through how you go about calculating it. So what you're going to do, you're going to look at the list of balances given. So we know that our production wages is 5,000, and our employer's contribution for workers in production is 4,900. So these are all considered direct labor together. Right, but wait, they give us some information regarding direct labor. And what is that information? The information is as follows. They say, the following production wages were omitted from the wages journal for the last week of February 2023. This net wage due to the employee, and it means that amounts, whatever we're going to calculate here, must be added to the balances given to us and determined over there. Right, so we want to know what must we add over here. So here we have our net wage, and this is the information given to us. Our net wage after deduction, is 11,315. They tell us that the total deductions for this employee amounts to 27%. So it's 27% less than what that person would normally have gotten. I want to add grade 12s, that when you see the production labor cost in your list of balances, that is your gross salaries or wage, that is your gross wage, okay? That is before deduction. So what we need to determine now is not our net wage. What we need to determine is our gross wage. Right, so how are we going to do that? Remember grade 12s? It's what you want of what you have. So we have 11,315. And once again, what are we trying to determine? We're trying to determine gross wage without any deductions. So it's 11,315 times what we want. We want 100%, meaning the amount before deductions, over what we have. So now, what do we have? We have 73%. How did I get 73%? Just side note, I said 100 minus 27 will give me my 73. So my gross wage minus my deduction gives me my 73. 3. And that 11,315 will be my gross wage of 15,500. So we're happy with that, okay? 15,500. But wait, there's more. They tell us that the employer pays 11% of the gross wages to the pension fund. Now, we can only assume that this is employer contributions, and it will be great if they actually tell us that, right? So that's your employer contributions. Employer contributions of gross wage for pension fund and 1% to the UIF, all making reference to gross wage. Now, there's two ways to look at it. We can either individually calculate 11% of the gross wage, and then again 1% of the gross wage. But why complicate matters? What we can do is just say employers contribution. Right, so we're going to simply say 15,500 times that by 12%. What does that 12% mean? It will make up the 11% and the 1%. And what is 11 plus 1? You at the back? You at the back? 12, well done. It's 12%, right? So you can do it individually, or you can just simply use a little bit of logic and say, it's 11 plus 1. Must be 12%, and therefore we'll say 15,500, and that amounts to 1860. Okay, that will be your 1860. So your total direct labor, what will it be? Assuming that we don't know what prime cost is, we are going to say, what labor did they give us? They gave us an amount of production over here, 5 to 5,000, 5 to 5,000, plus 4,900. Where did I get that? Employer's contribution. Remember, it increases our labor costs. Plus 15,500, which we just calculated. Plus 1,860. And if we add everything together, what does it equate to? Drum roll, please. 587,260. Yay! Well done. So we get to the same answer. Now, why did I do this whole calculation? I'm doing this calculation so that you can see how you get to direct labor if they did not give you prime cost. Okay, it's always good to know. Right, let's look at the last one, which will go really, really quickly. And the last question is as follows. Calculating break-even point. Okay, so let's calculate the break-even point. Cool, so what is the information that they are giving us? This is the information that they give us. They give us our direct material, direct labor, selling and distribution costs. We know that these costs amount to our variable costs. They're very nice to show you that it's variable cost, but you need to know that these three costs over there, direct labor, direct material, and selling and distribution is variable costs, or variable costs. Then they give us factory overheads and admin costs. Once again, they were being very kind to show it to you, something you must know on your own, okay? And then they give us our selling price per unit and the number of units sold, okay, which is 4,500. And if you look at the number of units sold last year, it was also 4,500. Last year's break-even point was 3,341. So now they are asking us to calculate the break-even point. Now, do you know the formula of your break-even point? Yes? No? Okay. This is what we're going to do. Your BEP is equal to your total fixed cost over the selling price per unit minus your VC, or your variable cost per unit. Remember, they also call this contribution costs. Now, when I refer to total factory or fixed cost, I am referring to the actual amounts. I'm not talking per unit amounts. Okay, I'm not talking about that. Right, so let's do our calculation. BEP. Cool. How are we going to determine our total fixed cost? So I'm obviously going to be using that fixed cost per unit. And I'm going to look at the number of items produced and sold. So therefore, I'm going to say 100 times 4,500. That will give me my fixed costs, okay, in rands. Then, as they've mentioned, your selling price per unit is 400 Rand minus the variable cost per unit was 304. And if and when we do our calculations, we will find that 100 times 4,500 amounts to 450,000. Right? Over our contribution cost per unit, which we say 400 minus 304 gives us 96. Okay. So our BEP, therefore, our BEP will amount to 4688 units. So it actually gives you a decimal 0.5, but we'll normally just say round it up to 8. Okay? The memo, if you look at past papers memo, you'll see that they give variances, but I would suggest just stick to one thing, just stick to rounding up and that's it. Okay, because you can't make a 0.5 of a unit. Right, so that is your break-even point. Okay, your break-even point. Now, pop quiz time, everybody. I just thought we'll just throw in a little pop quiz before I leave you. Okay, so, right, here we go. Pop quiz. Quiz time. Yay! So, you will have 10 seconds for the first question, okay? 10 seconds for the first question. You can shout it out in your class. Here we go. First question, 10 seconds. Which of the following is a variable cost? Is it A, rent, B, direct materials, C, insurance, D, salaries? And the answer is, it is direct materials, okay? It is not salaries. I know that we want to say it's salaries, but we're not sure what type of salaries. Remember, there are 2 types of salaries over there. It could be salaries of office workers. It could be salaries of sales reps. But in this case, direct material suits that answer. Next question. Sorry. 10 seconds. Explain the difference between fixed and variable costs. You got 4 seconds? Cool. So was your answer the following? Fixed costs remain constant regardless of the level of production, such as rent and depreciation. And while variable costs could change directly with the level of production. So the more you make, the more you'll get. Last question. I'm going to give you a little bit more time over here. Okay? Last question. 20 seconds. Sorry. If the fixed cost is 10,000 Rand, selling price 50, variable cost per unit 30 Rand. What is the break-even points in units? What is the break-even points in units? What would it be? And forgot. The answer is 500 units. Yay! For those that did the calculation without me showing A, B, C, and D. So it's 500 units. So we know that it's going to be 10,000 divided by 50 minus 30, which gives us a contribution cost of 20 Rand. and then taking 10,000 divided by 20 will give us our amount of 500 units. Coolio. Cool, everyone. Wow, we still have time left. That never happens in an accounting class. Guys, I just want to say thank you so much for watching and working along with me, whether it be live or on your own time. And I really want to wish you well for the mock exams and your final exams. And I just want to say, what is meant for you will come to you. I know it's very stressful right now. It's very stressful figuring out what you're going to do next year. But you can only control what you can control, and that is studying hard for all your subjects, okay? Last thing I want to say is actually enjoy being a child. This is your last year of being a child. Next year, y'all. Welcome to the real world. Yeah, but what is meant for you will come for you. Don't stress about it. Life will happen. It will work out, okay? So only study hard. Do your best for the mock exam. And I wish you the best for the final exams. So that, remember, be good. Say no to drugs and be the best version of yourself. Bye.